I know exactly what it's like to lose in these markets after losing for 3 years and honestly giving up multiple times. The worst part about it all is that I knew it was possible, but I just couldn't make it work. It doesn't matter how much I studied or anything, I just couldn't be consistent. Having to work 60-hour weeks in night shift just to get enough money into my personal account so I don't have to work a job ever again. Now, since then, I've managed to travel the world and not only that, make enough money so I can invest into other businesses. So what I'm telling you here is literally as raw as it gets, as raw as it gets. By the end of the video, you're gonna have an entry criteria that's gonna allow you to print consistently, but not only that, avoid so many unnecessary losses that ultimately dictate your performance at the end of the month. So let's get straight into it. And I promise you, you will not be disappointed. Nobody's teaching it like this.
All right, first things first, we're going to go over the theory, the concepts, and then I'm going to apply it to the charts right after. The first things first is entry one. So all entry one is a breakout trade, okay? So price comes into the area of interest located from your higher time frame, followed by a break of flow or a change of structure, depending on the terms that you use. However, the key distinction is we want to see participation with intent. Now, the break of flow would be the participation because it's switching flow from buying to selling, and intent, which is the volume. So we want to see large candles with imbalance follow from the rejection from the area of interest. It's incredibly simple, and I recommend to take this trade when we see price is very aggressively selling from an area of interest or a high time frame point that you're looking to short from or buy from. So you're in the M5, and this is your last demand that created this high into your area of interest, and then you see price break it, you would look to take it on here. Now, how that looks like on the chart, for example, when it comes to the execution, once you see this break of flow, change of structure, from your area of interest highlighted here, you'll be placing your RR, so your entry will be here, and your stop loss always goes above the higher time frame supply and demand levels that you have identified through your high time frame weekly analysis. If you do that, I'd highly recommend you start doing that if you actually want to become consistently profitable. Again, this is less probabilistically to work out because, again, it's the breakout. It could always retest back into that initial rejection. So you could always see something like this. And that's why it's extremely important for you to be patient and always wait for the optimal setup. However, when it comes to the pivot point, which is what this would be, then it can facilitate a breakout if volume from that area of interest is large. All right. Now on to type 2, entry 2, which is the one that I prefer to take because I have more confidence in it, because I know that in order for this to facilitate on the charts, institutional order flow will have to take part in order for this to form from my high priority zones, as I previously mentioned. So what this is, you're looking for a break of flow like entry 1, but this time you're waiting for the retest and a break on a sub time frame. For example, this is your M5 right here, and you're looking for a break of flow, but instead of taking it initially, you actually wait for that optimal setup, which is going to drastically increase your RR and get them snapper entries. And also it's a lot more safer because price action does tend to retrace, and you want to make sure that you're waiting for the optimal setup. And that's why patience pays. If you're on the M15 time frame and you're looking for a rejection, you go to the M5, M1, and once you see a reconfirmation of price switching from bullish to bearish with a break of flow or change of structure, that's when you would take the setup. Again, you see a lower time frame break of flow plus a retest back into the initial rejection from our higher time frame area of interest, again with participation and intent. We want to see volume because we know that to volume to form, there has to be institutional players at hold, and we always want to trade with the banks, with the money, and not against it. So how that looks like in practice, you see a break of flow, and then you look for the retest back up here, and it changes, and then you go to the M1, M5, and you look for the demands to be broken that created the previous high, and that's when you would execute. This is going to obviously increase your probability of it working out, but also mitigate your losses because you've actually waited for that to take part. Instead of just rushing in like an amateur, inconsistent, profitable trader, you can actually wait and let it come to you. All right, so how does this actually look like from a trade perspective? Okay, so we have my area of interest, which is highlighted in the purple. And what I'll be looking to see is that price to come up, and we look for the type 1, type 2 entry from this high priority zone to tell us that flow, which is currently bearish and the trend has been expanding into new lows, we want to see that reignite, change of control from a previous significant injection that created the previous low. So once price comes up, as I said, we're going to be looking for a type 1 or a type 2. We see a break on the M5 time frame or the M1, or a retest back into the initial rejection zone, and then we get in, and then we monitor time frame on a lower time frame. Oh, now price is actually retraced, and this is the M5 time frame from that area of interest that I just previously showed you. Now, as you can see right here, there is the M5 break of flow, because this demand was what created this last high right into that pivot point from the area of interest. Now there is two types you can play. We see an M5 break of flow, and now we can take it on here, or we could wait for the retest back up to this block, which is highlighted here. So there's honestly two plays to play. You can get on the initial breakout, because as we can see, there is significant volume followed by an imbalance, which is what most people say, IFG, whatever. But again, this is not what I teach or go over. So the first play, which is a lot less safe, you would take it on the initial breakout. You put your stop loss above the high priority zone, or you wait for the retest, because patience always pays. And then you go into the M1 time frame, which will be right here. And then you can take it on here and your stop loss goes above here. Or you can double stack them. You can take 50% on the first breakout and then wait for the additional 50% of your risk exposure on the second. So that's obviously risk management as well. All right, now let's actually go over this on another example. As I just said to you, we take it on the initial break, which is a breakout. This is the entry one, again, higher risk, because again, there's no pullback, because price usually does pullback and you can always wait. Again, it's completely down to your aggression on how you choose to select it. So this is the entry one. It's just literally a breakout with participation and intent. As you can see, we clearly have intent to switch flow once, twice, but not 3 times, but it eventually does. So we have the participation, which is also the volume, because we can see that there's a clear imbalance. You should be able to see now that there is multiple plays you could have took. You could have took it on this one and then reloaded on the M1 break on this. This is the M5 time frame, but because I've done the charts for so many years now, I can map out exactly on a lower time frame just from the M5. So obviously you can take it on here. Your stop loss would be increased, but it's a lot safer. So it's completely dependent and subjective to what you think is more comfortable with you. All right, onto another example. Let's zoom right into here. So this is actually the M5 time frame, and as we can see, there's another example of the breakout. So we have a break of flow from a high priority zone on the higher time frame, and a retest back into that. So you can see type 1, type 2, expansion into new lows, and you actually get a third entry. That's why patience actually pays. Nobody actually talks about how can you be patient, because you should understand that there is multiple opportunities more often than not. So you could have took it on here, which is also again the M5 break of flow, which created this, and it pulled right back into the expansion that actually created this low. So you can take it on here, or you can take it on here. So realistically, you're looking at 1, 2, maybe 3 here on the M1, 4, 5, the exact same chart, but just on the M1. As you can see, we have a break of flow here, the M1. After the mitigation, we have the expansion block that's unmitigated. We have participation, because look at the volume with a clear imbalance. Price actually comes back and retest it. So you see a break of flow, comes back up, retest, breaks again, and you're getting right here. Okay, this is order flow, guys. This is institutional engineering, and not many people talk about it without making it seem overly complex. This happens day after day on all different time frames. So again, this is actually how you get surgical execution with high probability. And this is how you actually become consistent, because now you're playing in defense. So as you can see here, this is actually the unmitigated zone from here after the previous mitigation, and price comes right back in and it gives you a secondary type 1 and type 2 entry. So if you missed it here or here, you could have got in right here, which has also got participation. Look at the volume. Volume, 0 pullback, 0 pullback, 0 pullback, Another example of a type 2 high probability break of flow to retest, and then you're looking for a secondary break of flow within that retest to increase your probability of the trade working out each time. This is an A grade setup. There's B grade and a C grade. B to C is usually just taking it out on the initial break of flow. Okay. It still works out, but again, it's B grade because we're not seeing a reconfirmation of flow. Because flow, order flow, and how price works, it usually tends to pull back. So we have the M5 break of flow and then M5 expansion right here from this zone. This is still unmitigated. So in the break here, it could have still come all the way back up to here because this is unmitigated. Same thing with the expansion point, but it comes back to the expansion point and provides a secondary transition, the exact type 2 into bearish order flow, re-establishing control from a higher time frame. Again, entry 2 is right here. See, from here to here, this is actually what it looks like. It has participation, again, volume, but re-establishing control as soon as it switches each time. There, you get in there. And if you wanted to wait further, then again, it's a lot harder to catch. Could have got in here as well on this break here to be even safer. Okay. You shouldn't always rush into execution because price always comes and you can always wait for the more optimal setup.
Now, quickly, if you actually want to become consistently profitable, the link is in the description and I can guarantee you will not be disappointed.
All right, so we're going to actually apply this into the charts. So again, if you do actually want to become consistently profitable, the link is in the description. We have 1, we can go over, 2, we can go over. There is a 3 here, but we'll just go over this one and this one. So on this specific example, the flow is bearish. However, as you can see, it does actually liquidate my zone. And again, that would warrant more caution. However, it was followed by an immediate rejection, which is telling me that this is just engineering at play. So my rationale would be I need to see a break and then a retest followed by a continued break. In this specific example, you see a M15 break of flow, which is what created this high here. And then you see an expansion. So you're looking for a retest back into this block and then an expansion into new low with your stop loss right here. This will be type 2. So let's explore that. So this is actually the block that I would mark out, and I'd be looking for a price to hit this, and then I'll go on to the M5, M1 time frame, and then once I see that break of flow has been re-switched back into the current M15 bearish flow, that's when I'll be more confident because I know that we're seeing a pullback, and then on a lower time frame, we're seeing a break again, and this is where I would get in. This is just continued order flow. This is what you need to look for when it comes to your high priority zones so you can understand who's in control, what's in control. And so price hits it and then you'll be looking for an M1 or M5 break of flow and you do get hit here. Your stop loss will be increased, but again, beggars can't be choosers. So, you know what I mean? You can take it on here and you can put your stop loss above the M5, but just know that there is a refined zone up here. So you'd be looking to extend it. Now, again, like I did say that you can take it on the initial retest, which is like that. And your stop loss will obviously go right here. Just type 2. So you see a break of flow right here. Price comes up to retest back into my zone and then you can take it exactly here. Again, this is a lot more riskier, but when it comes to Nasdaq, these futures, price moves very rapid and you always see these rapid taps of your zones. So that's why you got to be a lot more aggressive. So this would warrant a trade just because the higher time frame is also bearish. I know this is where sellers are going to begin to re-establish control. Now, if you want to be a lot more safer, which is completely normal, you go into the M1 and you can take it instead of waiting for the M5, you can literally just take it like that. This is a perfect example, right? Price comes back up here, yeah. And if you was patient, you could have gotten that. You could have gotten here. So as I did discuss that you can do 50-50 where you put 50% of your risk exposure on the initial breakout here, or you want to be safer, wait for the retest and then the tap. Or you could wait for the final retest, which will be back into this zone, which is what's preceding this tap. So as you can see, it doesn't actually break it. And then you look for like the M1 in here. And there you can see you got the M1 right here. I mean, you just increase your RR significantly by 50%. And then obviously your first lows will be here. And then honestly, I'd be very comfortable. But you obviously would need to see this broken first, this broken second, and then once you get past these two price points, your next target is right here. So again, if you took 50% on the initial type 1, which is the breakout from your zone, that is also valid. If you wanted to wait for the retest, you can do that. And if you wanted to be even more patient and then see if you can get a pullback back into this zone here and get in again, that's also completely fine. I usually tend to double stack if price allows it to do that. Again, stop loss is always key, so my stop loss placement is above the zone. So this is basically showing you that there isn't a fixed setup. You need to actually understand what the lower time frame are telling you, what it means, and how do you actually distinguish when control is actually switching. And then obviously, as you can see, you can ride it right down to that. And you're looking at how 1 to 22. And even if you did take it on the M5 break or the H1 break, you're still laughing. This trade alone, you don't need to trade for the rest of the month. This is one of them trades. That's what I take. I'm very patient and I only wait for the best high quality setups each week and each month. And then I look to swing that with trend. It's so easy once you fully understand that concept and how to actually execute. All right, the next one. So prices actually come back into this zone, right to the refined pivot point. So let's see how that played out again. We see a H1 breaker flow right here, which is nice, but let's see beforehand. As soon as it touched that zone, perfect. So this is textbook. This is literally textbook. So it hits your refine point area of interest. I'm going to tell you how to actually map out zones accurately, and I can guarantee that nobody's doing it like that. So we have a M5 breaker flow, perfect. Now you can take on the initial break, which is the entry 1, or if you want to be a lot more patient, you wait for the retest, and let's go to the M1. So, yep, as you can see, there's 2 ways you can play it. You take it on the initial M5 break, which is type 1, and you'll be looking at that stop loss there, ride it into the new lows. Or if you want to be a little more patient, you wait for the kind of retest, and then you wait for the little retest back into this zone here, and you paste it like that. So it's completely up to you, but either way, you could double stack. So you take 50% here, and then you take another 50% here. Regardless, you're still getting a 1 to 10 run. So to your first target, which is right here, and then your second target obviously will be right down there. If you want to be a little bit more patient, then you're looking at a 1 to 3, just to the first TP, or a 1 to 4. But again, if it was to continue with the trend, you're looking at a 1 to 10 and a 1 to 13. Comes all the way back up. You can even reposition. Like, that would have been another entry right there. Like, holy, such a good month. Yeah, it literally hits your zone. Look at this. Oh my days. Let's go into that further. Look at that. M5 break, take it on there, or you wait for the expansion. Boom. Or if you want to be a little more patient, you wait for the retest and then a continued expansion. So take it on the first test, never recommend. Wait for the break here, be even safer, and here. Or if you want to play it more like that, highly I don't recommend it, and then you put your stop loss right above here. So either way, there's 1, 2, 3. Now again, it did hit your TP, so you can take profit here and then reload here. Again, just still laughing. This is how easy it is. This is not complicated. Look, 1 to 7 to the low. So you're looking at a 1 to 9, 1 to 13, and 1 to 7.